So now I'm going to bring you to our panel discussion, how to capitalise on the adoption of disruptive tech. So we're delighted to welcome an esteemed panel. All right. So I've got Abe Smith, who's the Chief Growth Officer for Paymentology. Paymentology recently merged with Tatuka to build out a new payments and card processing powerhouse. And they're giving banks and fintechs the technology, team and experience to issue and process MasterCard, Visa and UnionPay cards across over 40 countries. Secondly, our second panelist is Jason Maude, who's the Chief Tech Advocate for Starling Bank. And that is a good title. And I think it's something that some of us are doing anyway, but we could probably do with a few more of those roles, steering firms both internally and externally. And then Piers Marais from Currencycloud. Currencycloud enables the next generation of fintechs to build cross-border payments and FX functionality into their platforms. And moderating, we're very happy to have Mark Walker, founder of the Fintech PAY360. Mark's been a great advocate for the fintech sector for many years and will hold our discussion together well, I'm sure, this afternoon. So, Mark, if I can hand over to you.
Excellent.
Thank you.
Thank you very much, Nick. It's always handy to have all the introductions done beforehand. It saves me a job, which is great, so I have more time to actually talk about the actual content, which is good. Excellent, thank you very much. I'm in a hybrid mode as well, so I'm using paper and iPad at the same time. So in response to the event, which is all about disruptive technology, I don't know which one's more disruptive, to be fair, but I'm going to put that there for a moment. As I said, we had a short call beforehand to sort of discuss a little bit about this topic, because it's a really interesting title. Not the Capitalise bit, but actually about the bit of disruptive technology. What is the definition of disruptive technology? And that's kind of like an interesting place that I kind of want to start with. And I know from our previous conversation, Piers, you had an interesting quote that you had on that. I don't know if you would like to share that with the audience.
Yeah, I think it was from the World Bank. Hi, everyone, I'm Piers. Nice to meet you. It's from the World Bank that talked about sort of disruptive technology, really talking about emerging technology that provides a step change in the access to goods and services through things like through cost, bringing those products and services to life to a wider market in a more efficient, effective way.
That's really interesting. I think also, I think we had Jason, I think you had some interesting sort of thoughts on disruptive technologies and actually the reasoning for capitalising as opposed to, not just implementing technologies for technology's sake. I don't know if you'd share a little bit of that to kick us off as well.
Yeah, absolutely. Hi everyone, I'm Jason. I'm an engineer by background, so I tend to look at things in a fairly, engineering technical manner. I'll try and keep the jargon light. But in terms of disruptive technologies, what we have to always be asking ourselves is, why is this technology here? Technology is a tool. And it's a tool for, that has to be deployed for the benefit of the customers or the clients that you're trying to serve, rather than just because it sounds cool. Every time someone comes to me and says, have you heard the latest about AI or blockchain or anything like that, I just substitute that word mentally in my head for the word hammers. And think about someone coming up to me and saying, have you heard the latest about hammers? They're amazing. How is your organization using hammers? Have you implemented hammers today? This is what I hear. No one gets excited about hammers because we all know how hammers are used, what situations they're useful in, and what situations they're not. And I think that when we approach any new disruptive technology, the trick is to find out where it is useful and then make it essentially as boring as hammers. That's the goal for any new technology.
Okay, that's handy. Hammers is a new one for me. I'm going to put that into my next one. Abe, maybe come to you and just help us reframe that slightly on the Capitalise side of things and what we're going to be talking about. We're going to be talking about use cases, and we're going to be going through various different ways that these technologies are going to be used.
Well, I think hi, I'm Abe. This feels very child's TV. I'm Abe. So I think with regards to the assessment of what we're calling disruptive technologies, one of the challenges that companies face is rather than trying to figure out how to do what they're already doing more efficiently, more quickly, more cheaply, is taking a step back and looking at what is a disruptive technology within the context of what their genuine mission is. It's a kind of wood for the trees moment. And if you, that does, the prerequisite there is that you have a mission and that you're able to kind of articulate that mission internally. And if you understand the mission, then you can assess a range of technologies on a more objective level, and particularly with regard whether or not they're going to serve your mission better. There's the old kind of analogy about the introduction of the internal combustion engine, and before that, technology was seen as a way of getting your horses to run faster. And if you take a step back, it requires that thinking. I think the other issue that we have to think about is you don't know what's going to help you until you've heard of it. And so you have to put yourself out there. If I came to you in the 80s and asked you how would you improve your inter-company communication, you wouldn't have said email because you didn't know what email was. So unless the company is A, kind of cognizant and conversant with their mission in life, with their raison d'etre, and B, constantly putting themselves out there, and that's why stuff like this is important, then they're never going to be inspired, and they're never going to question things, they're never going to see things they hadn't thought of before, or assess its value towards their ultimate goal in life.
Okay, and I think that kind of sums up quite nicely. Maybe Piers, coming back to you for a moment. So when we start talking about disruptive, and I was obviously in your role very much involved in the product side of things and offering products, do you see a lot of people coming to you and saying, I want the hammer, and you having to explain to them why actually the saw is better for them? Taking the analogy to another extreme, but
So at Currencycloud, from a product development perspective, we take a customer-first approach. We're trying to really understand what those customer problems are, jobs to be done. And so when we start to frame the conversation in those ways, we don't really have those conversations about, we need the hammer. We need the hammer to solve all of our problems. I think, though, it's fair to say that across the wider industry, we talk about hammers, these buzzwords, perhaps. I think you mentioned things like AI. That are talked about very, very frequently within the wider industry without actually coming back to the core customer problem, the core user problem that really, really needs to be solved. Just in terms of AI, it's something that probably many businesses are looking at. The scope that we're looking at within Currencycloud is thinking about this fundamentally broken global process of anti-money laundering. I think there is sort of between $1 and $2 trillion per year that's laundered, and yet only 1% of that is ever retrieved. And so we partnered. We take a partnership-minded approach at Currencycloud. We partnered with a company, a best-in-class company called Lucinity, to look at how we can then leverage a technology like AI to fundamentally make that step change in this case, in sort of trying to improve those AML rates, which again comes back to the core thing that's happening, the core trigger events that's happening underneath it. This is not AML for the sake of AML. This is really coming back to the human element of payments and transacting globally, and trying to say, how do we increase that 1% to 5%, 10%, 20% even, by employing different types of hammers at the right time to really fundamentally make a difference to people's lives. In the case of AML, things like money being, drugs being trafficked, people being smuggled. It's all of those types of things that this fundamentally comes back to. We have to think, kind of resonate around and thinking about these things.
Okay, so let's stay on the AI buzzword at the moment, and Jason, maybe come to you, and I suppose when a lot of people think of not necessarily Starling per se, but sort of challenger banks or neobanks, they think AI at the front end of things.
Yep.
But you've got a bit of a different take on where you use AI in the machine learning process.
Sure, yeah. So for me, where AI is useful is in any situation where you say, I can't define this, but I know it when I see it. So if I asked for a strict definition of money laundering, a definition that was strict enough that I could program it into a standard automated process that I could write some code to detect, people wouldn't be able to give it to me, neither fraud or any other sort of financial crime. And the reason is because as soon as we pin down the definition to one thing and encode that strictly into the system, that avenue, a vector for financial crime stops working, and all the criminals change what they do. It'd be much easier for us if they stayed on one thing and just did that over and over again, but sadly they don't. So we have to be able to respond to them. So what you have to do is be able to train a system to spot things that are unusual, which you can't really define in code. And that's where machine learning comes in, because you're able to train a system to look for things that are unusual and go for them. So things like fraud and financial crime. Other questions like what makes someone a good, a good credit or a bad credit. Questions like that are possible to put into an ML system. I think that I balk a bit when people talk about turning the power of ML and AI and utilizing it directly on the customer experience. There are, for my liking, one too many horror stories at the moment about people companies setting themselves up to try and understand the customer better than they know themselves. Now that either goes wrong, in which case you look like an idiot trying to think that you know the customer better than they know themselves, or even worse, it goes right, and you do know the customer better than they know themselves, which is creepy. So I would say that actually the best use case for that sort of disruptive technology is in the back end, in the back room, hidden from view, to try and make the customer's experience better without directly showing it.
Yeah, and it's an interesting one, maybe coming to Abe as well. There's some other examples I think that you had with regards to AI as well. It's interesting that a lot of the cases that we're looking at are actually back-end and actually not as forward-facing and consumer-facing as people would like to believe that AI is the next revolution, as it were, in different payment methods. So
for sure, and my mind immediately went to, was it Facebook's facial recognition AI that got into such horrific trouble a couple of years ago? That's a nightmare. But I mean, for us, the way we look at the world, particularly, so we serve fintechs, banks, brands who effectively want to do issuer processing, to deliver cards in a physical or virtual environment. The heart of that experience is basically risk management. And for any bank of the 24,000 banks who are somewhere in the kind of journey to digitization, rather like a casino, their business is the business of the management of risk, downside and upside risk. So, to Jason's point, the extent to which AI, and it's a considerable extent, can in the background help us spot instances where we can apply actionable insight to the data involved in the kind of back and forth between, for example, the scheme and the issuer, the extent to which we can help the issuer manage risk with those actionable insights is material. You think about it, that's the DNA of a bank, the management of risk. So, if you look at our kind of pet area, which is the area of issuers, we think that issuers have been fundamentally disenfranchised from a point of spend marketplace, which is worth arguably anywhere between $3 and $3.5 trillion a year. You only have to look at the increase in buy now, pay later, which in a couple of years will account for 3% of total retail spend. Now, that is issuers. Almost like it's a birthright. The buy now, pay later is coming in and taking food out of the mouths of the issuers. And why is that? Well, because the issuers fundamentally lack the data and therefore the actionable insight on the data to assess upside risk at point of spend. So if you have enough data and if you can apply artificial intelligence to that data in real time at point of spend, you can start to do interesting things, recognize points at which you can call the issuer and say in real time this is likely a fraud. For us, even more, but that market is, is a relatively developed market. For us, even more interestingly, you can actually put your hand up at a point in time and say, actually, this customer is right for this particular product. That could be a buy now, pay later product. But you're assessing, you're spotting, you're training the machine to be better and better at spotting that point in time when the issuer can make a connection between that customer and that $2 to $3 trillion market of upside, which could be buy now, pay later, could be insurance products, you name it. But that for us is a kind of good background example of how we're using AI.
Mm. And it's quite interesting. I think obviously we started with one of the most interesting sort of buzzwords in the market of AI as well. So let's take to another angle and let's think about sort of cloud APIs, which some people might in the audience go, that's not disruptive anymore, that's just business as normal. But that is a technology which has disrupted and is continuing to deliver scale. And it appears, obviously, from your point of view, your use of APIs and cloud is obviously quite large. So maybe give some feedback on that.
Yeah, and again, I would echo that point that for many people here, the concept of cloud APIs may be sort of business as usual. But we are, I believe, only partway on that journey. We still see many legacy incumbent institutions across the industry in various different sectors who talk about sort of this digital transformation journey that evidently hasn't progressed in the sort of the shape or with the speed that they may have wanted, that will be absolutely imperative to the kind of the success, the businesses that really survive and thrive going forward. We have to think about APIs really as the piping of the new financial economy, sending data. All it is data that flows between different organizations. And despite the fact that, probably cloud-first businesses like ourselves have been talking about this for many years, that conversation still has to happen in various other parts of the sectors of the industry. For businesses who want to remain relevant, who want to continue to capture the sort of the customer, the users, and importantly to retain them.
Mm. I think it'd be quite interesting, and maybe I was going to ask Jason a question about that. Obviously, Starling very much, cloud-based, API-based. If we had a incumbent bank on the panel here, they might still be thinking of it as something they're capitalising. What's your sort of take on that? And obviously, it's done now? You've built it, or is that still a disruptive technologies in your eyes? You're still trying to capitalise on?
It's not disruptive to us in the sense that we've already adopted it. I suppose it's disruptive in the sense that without it we couldn't have started. So that's the thing. But I guess the point about digital transformation for us is that it's a constant thing. It's constantly going on. So if you are working with in a company which has a roadmap for digital transformation, which has an end date, I'm afraid that your digital transformation has failed. I can tell you that already. What will happen is that a couple of years after your digital transformation is finished, you'll have to start another digital transformation. Digital transformation is a constant thing that is always happening. You're always having to improve, iterate over what you've got. At Starling Bank, no code lies fallow, so no code just gets stuck and just sits there without change. All code is constantly being updated, changed, improved. It's much more, I describe it much more like gardening than building a building. It's much more like you're constantly having to go to the garden, de-weed it, put new plants in, change things as the seasons change, and so on and so on. It's not a building which you build once and then brush your hands and say it's done. So the digital transformation project is a phrase that fills my heart with dread, and I would not work for any firm that had those three words in anywhere in their organisation, because it is destined to fail.
A lot of prospective employers.
I was going to say.
Yeah, indeed. Yeah.
I was going to say, Abe, you don't have a disruptive technology program in Paymentology.
If I did, I wouldn't say it.
No, you obviously wouldn't say anything now, of course. But obviously, you guys obviously have also benefited from adopting that early on, and some would say you're capitalising on that cloud-first based approach and API, etc. as well.
Yeah, I mean, I guess that's not. In the same way you can say we've benefited from oxygen. It's just like it's our DNA. I mean, but the funny thing. So, how to capitalise on the adoption of disruptive technologies? That's the title of this thing. All of you guys out there will be working with some kind of disruptive technology in the cloud, and we provide our services in the cloud. But there's cloud and there's cloud. And particularly if you're a financial services business and you have any client-sensitive data and you have any global ambitions, you better be careful about the cloud providers that you choose. Because, for example, in our world, we operate across actually 50 different countries now. We're constantly adding countries. And our kind of purpose in life is not just to work with the kind of cool and fashionable new fintechs and the brands, but also the somewhat unloved 25,000 banks who we still think are cool because they're our clients. But these banks, they're all over the world, and oftentimes they have ambitions to be in other countries. And if you are not genuinely cloud native, and I know that's kind of a much abused term, but I'll tell you what I think I mean by it, is that you are comfortable in it. Cloud is in your DNA. You are comfortable in any cloud-based environment, whether it be dedicated, whether it be multi-tenant, whether it be Azure, whether it be Oracle, whether it be AWS, anywhere in the world. Only then can you genuinely service that client. If you want to do business in Indonesia, you're not going to do it from a multi-tenant cloud somewhere in Australia. You have to be in Indonesia. Same for Nigeria. You have a whole raft of different countries. If you want to do business in Saudi, you can't just be on Sol. You have to be on Sol and Oracle. Unless you can create a single version of your code, which is accessible through a multiplicity of backdoors and manage all of that code simultaneously in a joined-up way in all of the different environments, you cannot serve that client. And if you think to yourself, if you are that client, think about whether your supplier, the person who's going to provide you that disruptive technology, is genuinely cloud native and is going to grow with you. I know it sounds like boring as part of the plumbing, but it's a strategic consideration.
Yeah, it's kind of interesting. And Piers, I was going to come to you obviously with Currencycloud. The clue's in the title. There's some cloud involved in there, obviously. And sort of just maybe build on Abe's point about how it needs to be built in right from the beginning to enable you to capitalise it for the benefit of your clients.
I suppose I consider myself fairly lucky actually working at a business like Currencycloud where cloud is part of the DNA, as you said, Abe. It is really a sort of a cloud-first, cloud-native approach that has always been taken. But I can't stress how important that those foundations will continue to be over those next years. We talk about things like embedded finance and how any tech company can become a fintech. That only becomes possible through cloud-first approaches and technologies and foundations through APIs, as we've just talked about. So while many people may not consider APIs and cloud as concepts as sort of disruptive technologies in their own right, especially for our CTA friends amongst us, they will still be technologies that continue to sort of cause disruption or disrupt the status quo, and importantly, hopefully, come back to kind of improving that end user experience, that end customer experience in all parts of financial services as we move forward in the years to come.
Okay. I was going to mention quickly to our live audience and to people in the audience, we will be taking a few questions in the end, so start thinking about some of those interesting ones, and we'll see one here as well. But just wanted to move it on to a subject which is obviously being heavily covered in a room next door, which is blockchain and crypto. And maybe come to you first, Abe, on your sort of thoughts of, is blockchain a disruptive tech? Is crypto a disruptive tech? How do we define where that sits into this disruptive technology layer that we're talking about?
Really hoping you get it, Jason. You want to do this first, don't you?
You want to do it first?
If you wanted me to do it first,
go for it.
Right. So, Abe was using me as his shield. First.
I was going to build on.
Yeah, excellent, fantastic. So, blockchain. Okay, so blockchain, very much like AI, it is a technology which has a tool which has a lot of potential in a particular circumstance, right? In a particular set of circumstances, it can be very useful, and you will, as soon as you walk into a room of blockchain enthusiasts, you'll get people running up to you and saying, it solves the Byzantine generals problem, or some such. What?
I can see why you wanted him to go first.
The question is, again, moving away from the technology, which is very interesting, very new and very novel, what is it used for? What benefit can we gain from it? And the same thing with crypto. This is the question that we ask. I was once told that Starling Bank couldn't be truly disruptive because we didn't use crypto. To which my response is, what is the purpose of crypto? Who wants to use crypto? The problem with crypto is that it is an inherently decentralized currency, right? That's the purpose of it. It is decentralized, meaning that no one person has control over it. So when it goes wrong, and it will go wrong, no matter what the people in the next room tell you, at some point it will go wrong, who is there to correct it? No one. There is no centralized authority who can help you get your money back. People often say that Bitcoin is inherently deflationary, and a large part of that is because people forget their password and they can't get into their crypto wallet. So those Bitcoin gone forever. You getting them back? Nope, because unless you manage to convince 51% of the Bitcoin holders to give you your password back, goodbye. It's the whole thing is inherently decentralized. And because of that, when things go wrong, there is no one there. As an engineer, I am terrified by the idea that anyone could rely on my code to the extent that I couldn't correct it. Software is inherently about iterative development, iterative processes where you fix things going ahead. So you need to have a process in place for fixing the problems when they occur. And I think my question to the people in the next room is, how do you intend to fix those problems? So that is I will stop ranting now about, what grinds my gears about blockchain and hand over.
I mean, you touched upon it's a really salient point. So we've recently been looking at a company we really like in the States. They are another payments company, and they happen to settle 30% of their transactions over DeFi rails, effectively. Which sounds cool, and if I were to make a prediction about how the kind of dynamics of schemes versus other means by which we can settle transactions is going to change, scheme share will shrink. Whether or not the schemes take share of other kind of other options to settle is debatable. They're certainly looking at that currently. But I mean, how do you do a chargeback if you've settled over DeFi? Part of the essence of payments is being fair to the customer and having and fixing stuff when things go wrong with the customer, because that happens a lot when you're a client-facing organization. So it's happening, it's changing for us, but there are huge hurdles to overcome at almost a philosophical level with the technology for its application in our world to be pervasive.
I don't know if you want to...
Yeah, no, I'm going to put something out there that will probably ruffle a few feathers, but I believe that the future of payments, and especially international payments in the space that Currencycloud are in, is not in the cryptocurrencies like the Bitcoin, the Ethereums that we're talking about, right?
Shake.
The Earth didn't shake at all, actually, maybe unsurprising. I think it comes back to your point, Jason, right? This is about, when you think about currency, about money, it comes probably down to two vectors, to trust and to influence. Trust from a demand side, from people, from businesses who have to rely on the fact that this thing, whether digital or physical, can actually be relied upon to transact. And from an influence perspective, when we start really talking about private decentralized cryptocurrencies, are we really, really convinced that banks, central banks, governments, states around the world are really going to let all of that influence, that power, go to something that is truly decentralized? Personally, I absolutely don't buy it. I think what's important is to look at the technology that underpins those cryptocurrencies. So there are all sorts of use cases for another hammer, perhaps blockchain. But there are use cases for how blockchain can and probably will improve the sort of the payment and international payments landscape. But I firmly believe that the future is not that we will all be transacting in BTC, for example.
Okay, very interesting stuff. I'm going to move on and ask you all in a bit what the next disruptive technology is in a bit, but I was going to pause for a moment and see if there's any questions from the audience that we've already got. They're a bit shy online at the moment, so I don't know if there's anyone that's got a burning question they'd ask to anyone in the panel. No, definitely not. You don't want to ask Jason about his views on and anything else? And there's an interesting question for Abe about KFC that came up in a previous conversation.
KFC is an awesome user of technology. So if you're talking about disruptive technologies, I was not that recently, but in fact it was a couple of years ago. I was in China. I happened to have had the night before a whole sea slug because I like to try the local cuisine. I really put it out there. Anyone eaten sea slug?
Yeah.
Yes, amazing. Not one single question, but people have eaten sea slug. It's interesting. Next day, I was thinking I would maybe tone it down a little bit, and I went for KFC because I still remember the sea slug. But anyway, I was waiting in the queue, and there was a great big screen, and there were a bunch of young kids in front of me interacting with this screen, and they were basically making their order. And so they go through the screen, they make their order, and then facial recognition comes up. And the face is scanned, they go to the counter, they take their chicken. There is no physical card. There is no virtual card. In the background, there's probably some kind of combination of UPI and kind of the state. The state basically holds your face in China. But what was interesting about that was the payment had disappeared almost entirely. Rather like, when you use Uber, the payment really isn't there. And I think increasingly that's going to be the way. The cards will disappear altogether, and payments will just become a kind of hidden bit of administration that goes on in the background. But that it was KFC, and that it was a couple of years ago, was kind of interesting to me.
Yeah, definitely interesting. So I've given you a little bit of a breathing space for you all to start deciding all your predictions of what the next thing was. Hopefully you got that. So Piers, it's now time. Release onto the audience. What is the next disruptive technology going to be?
So I'm going to call out Web 3.0 actually for some reason. Well, not for some reason. I'll tell you why. I think that's why it's going to be.
Preferable.
Yeah. Not just leave it on that note. So I like to think about Web 3.0 as effectively the internet as we know it today, but with that sort of sense of decentralized power given back to the creators and the users of the internet. So how many times have we all logged into kind of our Google Auth or Microsoft Auth or whichever authentication method that you've used within the past few seconds and minutes, if you've not been paying attention to what we're actually talking about. But in the last day, how many times have you interacted with those kinds of services that ultimately are making huge amounts of money from the likes of me and you? And I think that there will be this shift. We've seen this shift already happen over the past decade or so from the corporate to the consumer. And I see that shift continuing in this Web 3.0 world where power is just distributed back actually to the consumers, to the users, those people who are involved in any of these transactions, financial or not, in the sort of the new world. And really giving people that choice of which parts of that digital data, their digital identity, dare I say, do they want to share with which different types of institutions at which time and why? And I think there will be a huge part for the financial services sector to then play within that sort of more decentralized economy. Again, perhaps not using cryptocurrencies, but coming back to that idea of blockchain as perhaps a core principle, a core technology that may underpin a lot of what we'll see over the coming years.
Okay, interesting. Now we come to Jason. We're pretty sure it's not going to be crypto.
You're correct. I think that I'm going to go with embedded finance. So the idea that that your financial, what was mentioned about KFC, where an Uber, where the finance is directly integrated into the experience of buying the item. I think that will become more and more the norm. Now, it's already very much the norm for, general everyday spending and buying food and groceries and so on. I think it will become more and more so for larger and larger purchases. So purchasing a house, purchasing insurance, purchasing a car, eventually pensions when they realize that disruptive technology does not mean this new thing called a website. Apologies to anyone in the pension industry in here. But the idea that a customer's financial data ultimately belongs to that customer, and they should have the ability to port that data around to wherever they choose in a very simple manner without them having to go and sit down and print out 5,000 bank statements. And then bring it to their mortgage broker, say. But the ability for them to just be able to press a button and authorize the mortgage broker to see their the financial data that is required for this to happen and for it to be easily transferred, I think will become and then get a quote will become more and more of a thing, and it will become less and less that a customer who's buying a large ticket item like this will have to negotiate between their bank and their the provider of the service or good, and just go back and forth and project manage that ability. But instead, we'll be able to conduct it all in one place, and the whole thing will become a lot more consumer facing. So that is my prediction.
Okay, I think that's quite interesting. It's kind of like, it's almost with embedded finance, you're saying it's widening it all out. So from just being payments or fintech, we were encompassing a lot more, which insurance you wouldn't necessarily have always put into that financial model, wealth tech, and I guess a bit of everything is all going to sort of convene together.
My dream is the house shop where I can, it's somewhere I can walk in one day and, buy a house, which constitutes an estate agent, a mortgage broker, the legal services, and the insurance and everything that I need to buy the house. So I don't have to go to, 4 or 5 different agencies trying to negotiate between them, turning me into some sort of crazed project manager, who is paying them for the privilege of doing that job.
I can feel a lot of pain there. Have you just bought a house?
Buy a house.
Did it once, never again.
Difficult to follow from that.
I was just going to add to that, actually. There's been a lot of talk today in various different streams about the sort of payments with purpose. And I think, actually, we need to reframe this. We need to talk about the purpose of the payment. We need to come back to the job to be done, right? You want to buy the house. You don't want to, go and apply for the loan, right?
No one gets up in the morning and goes, oh, boy, I get to apply for a mortgage.
Exactly. And it needs to come back to that lens. It has to come back to what are you trying to achieve as an individual, as a business? And payments will be the result of whatever has to happen.
I guess, Abe, they've kind of stolen a bit of the good ones in there. Is there anything you want to add from your... Obviously, you want to buy your KFC with your face. That's obviously what you want to do.
I tell you what, though, but I've got a couple for you. We'll see. I see if it disappoints you, Mark. But what you're talking about, individuals taking back ownership of their own data, that's going to be a huge thing. I predict... the disruption, almost annihilation of the bureau market. Anyone from a bureau here today?
Jolly good, no?
I wouldn't put their hands up anyway after that.
I wouldn't. After that, no.
That's insane business model when you think about it. You have to pay for your own, oftentimes incorrect data to fix a file on you, which is preventing you from getting credit. It's your own data. And so that's going to change. But I have a couple of answers for you. One is something that we've touched upon already in our previous presentation with biometrics. Where it's kind of almost a overkill buzzword, but you really think about the implication of biometrics. It's not just facial. It's reading your veins. It's your microbiome. It's a whole raft of things. Really, your payment mechanism will become you. You won't need anything else. It'll just be you, and that's the way that we'll behave. And when you combine your payment mechanism being you and the payment itself being embedded, what that means is the whole of payments and the whole of authentication becomes invisible. You just go about your daily life, hopefully a little bit more securely, massively more conveniently. So that's my one question. I have another more nerdy answer. How am I doing?
I like that one. I have
another more nerdy answer. The basis of much of what we've talked about today, the security basis, is cryptography of some sort. And occasionally you read in the press or about IBM's latest quantum computer. Quantum computers are good for all sorts of things, but bad for millions and millions of other things. What they are very, very good at is decrypting regular algorithms. We are about to move into a world where the basis of 99% of all banking security that we rely on a daily basis in what we sell and what we use will be almost instantly underminable. And to the extent that anything isn't quantum resilient, it's not happening just yet. The extent to which basically every component of your security architecture is not quantum resilient, will be a hole in your security architecture. So you wouldn't really see it. It's not really cool. It's a bit nerdy, but that will be a disruptive technology which will have to be adopted by everybody.
Yeah. And be on the lookout for the other threat, which is snake oil salesmen saying that they're able to sell you quantum protection. in your security landscape, which that
gotta
is
write
my
that one
other
down.
disruptive technology prediction, that the buzzwords will continue, that they'll just move on.
Just take that off.
Move on to other ones.
Yeah.
It's an interesting one, and I guess I understood probably only about a third of what you said in that, unfortunately. And as most people will know, I'm not actually a fintech expert. I just ask some interesting questions. So how is that going to actually manifest itself then as we sort of move forward? Is it going to be, there'll be more and more sort of attacks that we hear about and more sort of disruption to our sort of daily lives and personal lives? How are we going to know that it's starting? That's to anybody.
Yeah, I think that it'll start, but in a very nerdy way, that people will start worrying about, well, this underlying cryptography that we rely on at the moment, but that everyone's forgotten we rely on, is suddenly no longer reliable on. So we have to now, change the way we do things, change the way we adopt a more. I'm no cryptographic expert, but adopt a more.
It'd be our hammer is not a hammer anymore.
Yeah, well, indeed, you will need a different tool in order to make sure that what we do is encrypted. But it'll be a bit like Y2K, I predict, but actually a problem rather than an imagined problem that people think is a thing. And there'll be a lot of people running around going, how do we fix this? And we will settle on a problem. Sorry, not a problem, a solution. We will settle on a solution eventually, and then things will move on again, and so on and so on. It's another step in the ever-expanding dance between people trying to secure things and people trying to break things, which will go on forever. Essentially, but we will. A lot of it will start in the very geeky, nerdy security press, infosec press, and then we'll gradually move out into the wider world, much like cybersecurity in general did. Right, it'll follow the same sort of trend.
It's really interesting. I feel like Jeremy Clarkson on Top Gear. I'm going to say, and on that bombshell, we've run out of time. So there's lots of opportunity for people to ask questions and follow the conversation and see what actually that's going to materialise like into the future. Thank you all very much for spending the time on stage with me. I've thoroughly enjoyed every moment of it. Thank you very much.
Cheers.